enough of the WISE community. Let's get into the nitty gritty and what's going on in this market. And I really feel right now that this is one of the best, if not the best, in the last 15, 20 years, opportunities for people to get out of the rat race. Like the rich dad, poor dad program is like right now. And I'm going to explain that in a little bit. But let me first explain what's going on in the market, because I don't know if people really understand it. So why is like everything tanking? Like, why are all stocks, like Netflix went down 122 points at 22% of your investment. If you were invested in Netflix, you lost in one day. Like that's some craziness, right? So what is going on? You know, some of my I have Loopring, one of my Bitcoins that I started, or excuse me, one of my cryptos, and it's down from like $2 down to like 80 cents right now. So why is the crypto market crashing? Why is the stock market crashing? It's been crashing for a while. What is going on? So it's kind of like a perfect storm is going on right now, as far as all the things that are coming together that's causing panic and fear. And the stock market, just remember, it overreacts. All right, it overreacts to anything that happens. Like when things happen, it goes crazy. Like it's the same thing, and it's not just down; it's down or up. You know, when it's up, people get FOMO, which is fear of missing out. People jump in, they start buying at really high prices, and then the opposite happens when there's FUD, which is fear, uncertainty, and doubt. People get scared, people jump out, people they start taking their money out and put it on the side. So, and that it's like reverse FOMO, right? So so what's going on right now with the markets? Well, number one, the big thing is the Fed, right, which is the Federal Reserve. Everyone's worried about the Federal Reserve raising interest rates. All right. So what happens is inflation goes up. Inflation is like the tax on poor people, right? It's in the middle class, because your money doesn't buy you as much. So even though you might have the same amount of money in your bank account, what you can buy for that money is less, right? Because prices go up. You know, when I was a kid, you know, I would get a candy bar and it would be, 50 cents. If you had $1, you got 2 candy bars. The same candy bar now buys you, 50 cents buys you 1/3 of the candy bar. It's like $1.60, right? So that's called inflation, right? So even though you have the same amount of money, it doesn't buy you as much. So inflation has been going crazy. So what does the Fed do to, one of the things that are done at a very simplistic level is they raise interest rates. So by raising interest rates, it lowers inflation. I'm not going to explain the whole thing because I got so much information I got to go through. I can't explain macroeconomics to everybody, but interest rates go up, inflation goes down, right? So, but what happens is when interest rates go up, that means that companies can't borrow as much money, right? Because it costs more to get capital. So the stock market doesn't like that. They don't like that. It's hard for companies to get money to then do whatever companies are doing, capital investments and build their company and pay payroll and all that kind of jazz, right? So the stock market, when the Fed says they're raising interest rates, they leave. They start taking money out of the stock market. Now, the reason inflation has been going crazy is because we printed so much money over COVID. Like, it's not like all the $1,200 checks that people were getting, they didn't like tax you more. They just made more money. That's it. Well, if you make more money, if you just create more money, well, then that brings the value of the money down, which then means that the money is worth less, which is what inflation is, right? So hopefully that makes sense, right? So, so the point being is they want to retract the money and change inflation. So, so now they've said, the Fed came out. The reason why the stocks went down in December is because there was fear about what was going to happen. And then the Fed came out and they said, yeah, we're going to raise interest rates. And then that made the stock go down more. And then like a week ago, the minutes from the Fed meeting were released. Like, when like what they actually said, not just what they announced. So what they said in the meeting. And what they said in the meeting was, this is a lot freaking worse than we thought it was, right? So that caused stock market to go down even more. And now on January 25th, they are going to announce how many times they're going to be raising the interest rates over the next how many times they're going to raise interest rates over this year. Some people think it's going to be 7 times they're going to raise interest rates. Some people have said 2 times. So the uncertainty of this, right? Fear, uncertainty, and doubt. There's a lot of fear there. There's a lot of uncertainty. So stocks continue to go down, right? Because they don't even know what's going to be said. Is it going to be really bad? Is it not going to be really bad? It might be really bad. So let me get my money out now before the stock market goes down further, right? So this is what's going on. So January 25th is a big date this week coming up because, well, I'll talk about that when I get to the good news. Russia attacked Ukraine after Biden said, I'm not going to let that happen. And Russia said, whatever, Sleep Joe, we're bombing them. So they bombed them, right? So there's uncertainty there, all right? Anytime there's war, it makes the stock market nervous, even if we're not in, especially since it's Russia, and especially since we said, don't do that, and Russia did it anyway. So again, uncertainty, fear, uncertainty, and doubt. They don't, is anything going to happen from that? We don't know, but because we don't know, that's uncertainty. So the market goes down, right? So that's another reason to, they're afraid of that. Omicron, right? So I don't even know if I'm saying that right, but COVID. Okay, so the Omarion virus, right? So poor Omarion. So there's more uncertainty and doubt about that, right? Because the cases go up, and the more the cases go up, and I was going to say this later on, but I'll say it now, is because of what happened last year with the COVID. What goes on is the algorithms are changed, right? Most of trading, I know people think like it's the big banks and these hedge funds, and there's these evil people who are twisting their mustaches and hatching plots to destroy you. And it's not. They just set up algorithms. Like there's just like sometimes I'll watch some stocks and it's like, how did that end up like right on the button, like right on that number? And it's because there's computers that are doing transactions at like ridiculous speeds. So the new algorithms since last year when COVID came out and the cases went up really high, right? In 2020, right? In 2020, the cases went really high and we shut down everything, right? And then the stock market tanked. So that's in the algorithm now. So as the cases continue to go up and up, the algorithms are saying, well, we might get shut down again. So they're automatically taking money out of the market, all right? So this is just, it's a part of the computing system of the stock market, which is adding to this tanking, right? So we got the Fed worries, we got Russia attacking, we got Omicron, we got people who just don't trust Biden to do anything. His approval ratings are like negative, right? So they don't think he's going to fix it, all right? So nobody's thinking he's going to come and save the day or do anything that's going to be helpful. The banks last week, this past week and the week before, they had their earnings. So usually institutions, Chase, all the big banks usually will have their earnings before the main growth stocks. And the banks all had bad reports. Not bad reports, but not good reports. Let's just put it that way. So when the banks missed estimates, that also pushed. Estimates are really important. Like those Wall Street analysts, and they say, we think this is what should happen. Sometimes they don't know what the hell they're talking about. Whatever. The analysts have a very big impact on Wall Street. So they make their estimates on what they think should be happening. And then when earnings reports come out every quarter, and if the earnings don't equal the estimates, then the stock goes down. Because the people who do the investing, they go by the analysts. They say, we're not going to analyze those companies. We're going to let the analysts tell us. And the analysts say this, and if it's under that, then they say, well, I guess that company is not doing well. And they take their money out, right? So, and they move their money accordingly. So even a small miss or a small beat will send stocks up or down. So analysts have a very powerful impact, especially during earnings reports, right? Around earnings seasons. Another thing that is pushing the stock market down right now is Netflix missed their earnings. bad, right? So Netflix is one of the FANG stocks, right? FAANG, right? And those are the five big corporations. It's Facebook, Amazon, Apple, Netflix, and Google, right? So those are what are called the FANG stocks right now. Those are the very big, super big corporations, and they have so if one of those, which is the N, which is Netflix, reports bad and tanks, then it creates more fear, uncertainty, and doubt about the whole entire market. So the other ones, all those other ones that are in there haven't reported yet. So they're looking at Netflix as an indicator as to that this is bad news, more bad news. So bad news, Fed, Russia, Corona, Biden sucks, banks missing their estimates, Netflix, that's why, and all those things together with Netflix going, then tanking, people seeing that and getting more scared. So now what happens with the crypto markets? So the crypto markets all sell off. Why are the crypto markets selling off? The majority of the crypto markets are, again, it's the same. If you go, one of the things I look at when I look at cryptos, and I'm not a crypto expert whatsoever, but one of the first things I'll look at when somebody says, hey, check out this crypto. Why? And they say, well, it's going up. Okay, so you don't know what you're talking about. That's the best way to get me not to invest in whatever it is you're talking about. If your only due diligence is, well, it's going to go up. Okay, or it went up. That's even worse. It went up. Oh, it went up. Okay, then it's up. I should probably not buy it right now. I'll buy it when it's down. So buy low, sell high. That's something that people tend to forget all the time. So the crypto markets are held, a lot of these coins are held by big money, all right? And your objective all the time should be to figure out where big money is going and get there before they get there and leave before they leave. That's how you make money as a retail investor, all right? I've done the whole analogy with the surfer before, right? So, if you're a surfer, you don't wait till the wave is crashing, then it's too late. You got to be out well before and look for swells and then start paddling way before it turns into a wave, right? So that's where you want to be. Well, the crypto market is determined by big money. They own, if you look at coins, I remember looking at Shiba Inu, people were like, buy Shiba Inu, buy Shiba Inu. What was that, like 0.04 zeros and a 7? And I was like, well, let me go look. And I saw like one person, literally one person had 410 trillion Shiba Inu coins. He had 43% of all the coins. So that she, it, whatever it was, it was one entity that had 40%. So that person decides tomorrow, hey, you know what, I'm out. 40% of my investment is gone. I don't like to invest that way. So I don't like to trust one particular person to judge my investment. So that's why I didn't get into that coin. So and that was a good thing because it's horrible now. But here's the thing with the big money. A lot of big money was over leveraged as the stock market was up because people, the big money also has their people too, right? And so they were taking out margin, they were taking out loans because money was really cheap, right? Because the Fed had interest rates really low. So they're going to start raising now, but they're really low. So they were taking out money, taking out loans. If you were in the cash flow game, you understand this is what people sometimes do. We get a good stock, we're like, I'm going to take a loan from the bank and go buy the stock, right? So AK is super high. That's why he went bankrupt in the last game. So anyway, so they're all over leveraged right now. So what that means, over leveraged means, is that they're using margin. They're taking, and when you have a lot of money, just like the more money you have, the more money that you can get that will be loaned to you, right? So some of them are 5, 6, 7, 10, 20. I was looking at like some of them were like 30 times like what they have in their account, the actual liquidity that they have. The bank can lend them 30 times more than that to go and buy stocks and move things around, right? So now the whole market's crashing, right? So then what the bank does is they say, hey, yeah, you used to have like $1 billion in there. Now you have $750 million. So we're not going to loan you as much. We need you to sell some of those stocks, and we need some of our money back, right? Because we were loaning you based off you having this much money, and now you have this much. Your portfolio is worth this much. So we need you, they get what's called a margin call, all right? So you need to have a certain amount of liquidity, money there. So what are the big money doing? Institutions, hedge funds, all that stuff. They're taking their money out of the crypto market, because you could do that even on the weekend, right? You can do it, it's always open, right? So it's very liquid. You know, that's one of the things with crypto. It's like, I remember, like, I can't sell, even if I sell my own stock, if I need some money, I want to sell a share of stock, I got to wait like 3 days before I can even get it to my account. With my Coinbase account, I could just boop, 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 instant transfer, bam, I got money, right? So I could sell the coin and have it in my account within a minute, right? So this is what's going on with the crypto market, because all these institutions are over leveraged in the stock market. They're taking they don't want to get margin called, so they are literally taking their Bitcoin, selling it, and having that liquidity so they don't get that call. So all these things are coming together to cause the market to go down. If you are looking to learn more about building wealth and want to support the channel, come join us at thewisecommunity.com. WISE stands for Wealth Inspired Student Education, and our community is a group of people looking to change the current economic system by helping everyone get financially educated and achieving financial freedom. Members of the WISE community can join us as speakers on our Clubhouse, Twitter, and Stereo app shows, get free stocks for signing up with trading brokerages using our referral codes, and get free access to our bi-weekly classes, lectures, and webinars. We also organize a weekly cash flow tournament game, which helps people learn financial education by doing instead of listening. We give out monthly cash prizes to all our winners. Now, the best thing you could do to support the community is hit that like button and subscribe. It's free, it only takes a second, and your interaction really helps these videos get seen by more people. I also read every comment, and if it's a good one, I'll have it included in a future video. All right, let's get back to it.